Welcome, this is Day Trader Genius. My name's Steven, and you are about to listen to a chat on Genius Street with Alan. It is an amazing talk. So, without further ado, let's get right to it. Enjoy. So, here we are. We're looking at the Day Trader Genius. I'm here with Mr. Alan Maxwell. How are you doing today,
I'm
sir?
doing, I'm doing great, thanks.
Great. So we've had a lot of conversations in the past about the market from a general perspective and economies and just looking at things from a really long-term perspective. You know, the
Yep.
name is Day Trader Genius, but that's not all we do. In fact, that's a small portion of what we do. So here we are, the man, the myth, the legend. We're going to be talking about long-term market trends and corrections, and let's see where we end up. So Alan, where do you want to start with this?
Well, because we're looking at longer trends, the thing about the markets is no matter what time frame you work with, so you're a day trader, then you're looking at 1 minute candles and 5 minute candles and that kind of stuff within the scope of a day. And you obviously see lots of ups and downs, and you get to play with all that with the replay tool. But when you look at the bigger picture, which is actually where I started, then that's where you go look at the market. Yes, a little Rolodex indicator. Yeah, just click on that. That gives 100 and I don't know how many years, 118 years worth of data that you can snoop around with. And you can see these are weekly candles on the bottom, but along the top is what the years look like. So you can go all the way back to 1900 and say, well, what happened there? And you see you've got the candles. And along the bottom, there's some color that just says you should have been in a green position or a red position. Like get out, you're not going to make money, you're more likely to lose money.
Yes, absolutely. So it's pretty plain and simple. Green means it went up that year, red means it went down that year. And
Yes.
on the bottom, you have two different ranges. You got 1 year and you have 5 years. Now, in the beginning, it has to go five. So the last year or the first year is 1900. But if you go
Yeah. So
1805,
yeah, that's right. You could, you get to see like a bigger picture. This is what an investor would see when they're looking at the market and they go, well, I should have bought then, or I should have sold then. And yeah, that would have been better for you. The idea of holding on forever doesn't actually make as much money as getting in and out for a suitable time frame. So you're not looking at getting in and out, on a 1 minute basis. If you're an investor, you're looking at, well, should I stay in this month as the market capped out and looks like it's more likely to fall than rise?
just varying
And
degrees of risk at the end of the day.
right. And so there's no perfect solution. You're always going to have small losses and small gains and big gains. The idea of this is that you want to avoid the big losses. That's where at the beginning of the candle on the bottom there, yeah, you see it's like it started to go red right there. So that means you'd be out if you were a holder of that.
GTFO.
Yeah, yeah. So if you actually shorted the market, shorting it during that period would have been pretty good. It's not perfect. Uh, and then you got a little another, but you see at that point, yeah, you've got some greens that start up and do nothing. But then you got some greens that start up and just keep going. So in this case, you would have just held on until you got the red. How did you turn out? Well, much better than you can click the plus and minus one at the edges. Yeah. And they'll take you forward a year at a time.
There we go.
So yeah, so you got some red there, and then you got back into green, and then you got red, and you actually, it doesn't look like much, but when you're picking up an extra 7% here and there, and you're avoiding these 20% drops, and then you get back in again at a bottom, oh, and you lose 3% because you got in and then you got out, but you're missing all the big losses. That's the point of that thinking. So, like today's topic, you want to talk about corrections. Yeah, you have 118 years sitting here, 119 years of what these little red markers on the bottom are giving you is corrections, or, major falls. If you, like, you go to 2008, 2009, what happened there? Well, oh, you should have been in the red side there. Maybe. Yeah. When it goes from 13,000 down to basically a low of 6,000, and then you got back in and you wrote it up. And so it's not about perfection. And this is where people want to have the optimum result, and they drive themselves nuts for an extra few percent here and there. And you just can't succeed that way. You get upset and unhappy, and because you missed a little bit here, and because you tried to get that little bit, you lost a little bit. And you have to just say that this is good enough at some point, and just, what, it's working.
Yeah.
Just put more money in it. It's a system, and forget about it.
Yeah. And it's especially confusing now because the only thing that we hear about from the news perspective is the one guy or the two people that timed it perfectly. Or, now we got to question the legitimacy of what they're saying. Like, are these people moral and ethically, good people? Or are they just sitting there lying to make more money? Or I don't know, whatever it is. So there's a bunch of stuff out there that's like, we need a simple approach.
Right.
Like you say, going after 1% or 2%, that's just going to drive you crazy. The sanity of the trader is difficult to deal with.
You can't get it either. And the people that pick the ideal top and the ideal bottom, they might get that twice in their life. That's how that works. And there's actually statistics about that. You can be the perfect top and perfect bottom a few times in your life. I've done that with the day trader, where I sold, something at the absolute best price for the day. And I would say I got lucky, because that's pretty close to the knife's edge. If I was like, if I asked for a penny more and I didn't get filled, what would I'd be losing money. I'd be losing 10% or something like that, rather than, I got out at the perfect amount. Well, that's a little bit too close to the edge.
Yeah, I totally agree. And that's at any scale, really. I mean, you're talking, you could do that on a large scale. You could get out perfect and you miss this, but then the same rules you use for getting in, they're going to be changing. So you're not going to get in on this one because your rules are different. They're not systemic in nature. They're not simple enough at the end of the day. They're very specified.
My rules would be the same.
Right.
My rules would
the
always
recommendation.
Yeah. So, but yeah, this is what happens. And I've worked with people that use artificial intelligence and heuristic back testing. And as you say, they keep modifying the rules, looking back to optimize the future. And at the end of it, they don't actually come much ahead. And there's guys that have done these kinds of studies for 80 years, especially with computers. Like every bunch of years, there's somebody new that publishes something that says some statistic. And like, if you just find a good system that works really well most of the time, then that's all you need. This idea that you need to reinvent and no. There is no such thing as a perfect one, unless you've got big money. And even if you have big money, like Warren Buffett, I remember when he got into Forex, he lost $600 million.
So what's big money? Because a lot of people say that, and we don't really, what's big money? Hundreds of millions, billions? What would you say?
Well, if in the market, every market has its own scale of how much liquidity it has, how much money can be bought or sold in a time frame. So the American stock markets, if you add it all together, are worth about $38 trillion. But on a daily basis, you're looking at, hundreds of billions that get traded in a day of all shares. If you look at the options market, you're talking about, maybe $10 billion or $20 billion that get traded in a day. Versus the stock market, which is, 250 billion. Well, but you're only going to be buying or selling one stock. Well, how many shares, how many options? This is where you want the computers to give you all that. There's no way you're going to figure that out by yourself. That's what they're there for. So big money depends on the pool.
Depends on the pool and it depends on the impact.
Yeah.
So that's interesting. You know, Warren Buffett losing $65 million when he got in.
600 million.
Oh my God.
Now, Forex, foreign exchange, that's where you're buying the US dollar and or selling the euro and doing that leveraged or unleveraged. It's a multi-trillion-dollar a day game because we're talking about money moving around the world. And so if you don't know what you're doing, would you really throw down $600 million on a bet? Well, if you're a billionaire, see, big money to him is, well, I could lose that and I'll be okay.
Yeah.
He's got,
He's not going all in.
he's not going all in. And so he knows that that's foolish to go all in. You want to keep your house, you want to keep your car and, play all day in the markets that you want. But, at the end of the day, you still have your house and your car and you got food and you got enough money to live on for the next 20 years. You're good.
Yes, and that's something we love to talk about in coaching courses that we do is you setting yourself up so even if you fail, you will still succeed. That
Yeah.
is what we're doing. There's a lot of preconceptions out there of day trading and all this stuff, and that's media inspired mostly, not really data inspired. But the ones that we see, and even in our own groups, they're really calm, collective, consistent people that really don't pay attention to those kinds of things. They just do their thing day in and day out, and that's it.
So in that regard, because they're just following a system, which is math based, it's not opinion of some guy who just wants to look good. I know there's people been saying forever that, oh, that's the top of the market and it's going down. This happens in real estates and stocks and everywhere. Can you just click to the most recent days you got here on this chart? So there's people that said it was the top of the market at the beginning of 2017. And then the middle of 2017 said, oh, that's the top. And then, in 2015, there was people saying, well, that's the top. And all that kind of stuff. And I'm like, well, if it's rule-based, just as a simple idea, so there in the middle of 2015, you had a top price of just around 18,000. Yeah. So if you said, well, my system is if it breaks that top, then it looks like there's an uptrend. That would have worked. Oh, but I got out here and I didn't get back in there. Well, this is where you're using simple ideas. Notice that you had a green marker in the spring of 2016. So right there. And you didn't get red until, and it was just a little spot of red. So what happened? Well, you caught the ride up and you didn't have to do any thinking. I love that kind of trading because I've been a guy spent, a lot of years trying to figure out how to make this work. Well, that's what you're seeing there as well. Just, buy it here. It's pretty good. Don't think about perfection. That's where people drive themselves nuts trying to get the best deal. And that's a waste.
It's a waste of time, spirit, intellect. Everything that you have to offer is a waste of time. It's like simple rules. Understand, in some of the studies, reaching back into history, you look at the behavior over time to assess the purpose of any system. So when you assess the economy, you can get really deep into the different ideas, but at the end of the day, it's a growth-based economy, which means if it's not growing, people perceive it as not performing well. There's no like a balance when it comes to value. The value, the chart's either going up, sideways, or down. And people's opinion is shaped by those things, and they react in certain ways in different scenarios. So that's why, this is the perfect venue to talk about this, because when you see different patterns of these booms and busts, or booms and then pre-bust where the risk is building and people are unsure. And we talk about big time market movers with hundreds of millions of dollars to lose, and they don't even bat an eyelash.
Right.
Well, there's some preconditions that we need to know about. So here we are. We are right here currently And how do you feel about this, Alan? You feeling like we're we're just gonna go to the moon? It's never gonna stop. What are you feeling about this?
Well, no, they do stop, and because the markets are driven by belief, so you've got different ideas about what they believe is going to come true, and there's fundamental stuff that you can look at, and that's where some of the people will be selling because they believe that's the top, and so because they're selling, are there buyers to take it? So if there's more sellers than buyers, then nobody's going to want to grab that thing. And then it's like, well, what do I do? And I got to sell at a lower price because I got to feed my kids or something like that. Well, shouldn't be in the market if that's your situation. But the idea is that you've got competing beliefs, and when one takes off, then it drives the market either up or down. And so some of the most successful people have the same ideas from even 100 years ago. So that book, Reminiscence of a Stock Operator, was written about 90 years ago,
Yeah.
and it used information from even 90 years before he wrote the book. And I believe it was that book. There's a lady in there named Hetty Green, and she lived in New Jersey, and she had an idea which is kind of like the book Blood in the Streets. The idea is that she would buy it when nobody wanted it, and then she would sell it when people would pay dearly for it. So
Mm.
basically, she's looking at extremes and then buying or selling the extremes. So yeah, so it's like it's gone, as some would call it, parabolic at the top. That would be the week of January, where it's gone up, 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 and another really strong push, and people would be paying dearly for that thing. But if you look at the bottom of 2008, for example, nobody wanted it anymore. It's like, ouch, this is terrible. But there's a few people that were buying at that time. Well, the problem with picking the tops and picking the bottoms is it's really easy to be wrong. And that's why I don't like the idea of being what's called a cycle trader. And uh, and I've researched for myself what I call extreme returns, making the most out of it. But it's about an extreme coming back to balance, which is sort of the Hetty Green idea. And it's not her idea; it's an old idea. And we're talking about somebody that lived 100 years ago was using that idea. It's quite successful. She was one of the richest ladies in New Jersey.
We
Anyways,
got 5 years. What year was that about? Let's just say it was around 1920.
it wouldn't matter.
So
But that's why this data is here, is for those that need to research to figure it out. And I know that there's that kind of reason. Don't believe me, and you're going to go build your own. That's quite fine. I was definitely one of those guys, but I've come to the point where I don't need to build anything better. As you and I like to say, the wheel is already round. It comes a point where it's like, you know, how much rounder does a wheel need to be before you go, this is a vehicle
yeah,
for building wealth now. I don't need to, or an income for the day trader.
yeah.
How much more do I need to do to, get it right? And, but you see, this is why, is you can test these rules on the bottom, is like at the point it went red and you stayed out until it got green, that's a big drop. Oh, you're in for a little bit out because it was wrong. Oh,
There's only like $3 of movement in that right there before it turns off again, and then you're back in at
yeah,
you know at least 10% below that point again,
right.
and you are just doing really well.
Yeah, and so you're in, you're out, and then this is where people go, well, I don't like that, and shouldn't it be better? And it's like, really? Better? It's
You know,
already very, very
that's it
good.
right there. The expectations, they get us every time, because we're not looking at charts usually. We're looking at, how do I feel today? I'm having a great day. I'm just going to
Mhm.
trade. Well, yeah, but it's white. There's nothing going on. So have your good day somewhere else.
Yeah, well, so on a different time frame, inside that week, when it's white, or when you get those two red candles, or maybe there'd be a guy who's a day trader who would go, yeah, I'm going to short the market because, we're way off the top when we gap down and, all the things that we do. It's the same story. It's just a different time frame.
Yeah.
So there's always ups and downs. And when I started looking into how do I, beat the market, and I wasn't trying to beat the market, how do I do well, is there's only a few things. One is it goes up and it goes down. Well, that's not really helpful. Um, okay, so what is helpful and true, like absolutely true that you can deal with is like it doesn't go up forever in one line and it doesn't go down forever in one line. So it always has a point where it stops and turns around. And we don't know for how long. And it's just like, well, that's still a lot of unknowns. But at least we knew something is it
Yeah.
doesn't go one way forever. Okay, great. How do I deal with that?
What do I do with that information? Do you read do you watch CNN or Fox News and listen to what they're telling you?
And a lot of the better successful traders, they'll tell you don't listen to the news because it screws you up, because you're listening to a bunch of people's opinions. Who are these people that have these opinions? Like, what do they know? Like,
Yeah.
do they actually trade successfully? It's kind of like listening to a guy that wants you to buy tires, or and he knows nothing about. He's never been in a car, so he doesn't know the handling and the performance of the tires. He just says, well, XYZ brand is the best. And it's like, well, okay, how'd you know that? Did you drive a bunch? Did you do statistics? Did you, you know? So that's the thing about these guys that are on CNN is they listening to advisors and experts. Okay, so who are these experts? And are they there to help me, or are they just giving a general opinion?
That's an interesting question because they're sitting on there talking to other people about what they should do while
Hmm.
they're not actually doing it.
Yeah, which is kind of like, yeah, I'll talk to my dentist about teeth.
Yes.
I'm not going to talk to, Crest about, how my cavities ought to get fixed. Well, they'll tell you, well, if you take our stuff, then you prevent that. And it's like, yeah, that's good. But at this moment, I need a guy to actually look at the tooth to get it fixed. I don't want an opinion about what I should have, could have next time. And that's the thing about news and all this is it's already too late.
Yes.
Whatever did happen, happened. And the most funny part for me about it all is they're telling you what they think is the reason for it went up and down. When you start to listen to the news like that, you actually realize that they're just trying to fill the story with why it happened after the fact. It's kind of like, when you hear about these mass shootings or any other news story, then they come up later with why it happened. I would much rather know, okay, don't be in that place because it's looking bad. A guy
Yes.
walks into the room with a gun. That would be much more interesting to me than why people got killed after the fact. Oh, there's a gun in the room. I should walk out the door now.
Yes.
That's the kind of thing that an indicator on a market will do for you. It's like where you've got the cursor there, is like when you've got that first red, that is time to leave. It is not the time to go, well, why did it happen? And maybe, it's just a short bubble. And, during all that conversation, then the market drops strongly. Well, okay, that's a good bottom and I should get back in. So yeah, you could get back in and it rises up for a little while. And then what? It dumps back down. So there will always be people that go, well, I could have made a little bit of money there. Well, you looked on the other side of that line where you had the green going up, up, up. It looks kind of it looks kind of the same as this other side. But for whatever reason, the computer says, no, that other side isn't as favorable and doesn't throw down the green for you. It just
Mm.
says, I don't know. Red is not maybe the thing you have to do, but I'm not giving it a green. I'm just like, I don't know.
Yes.
Well, that's the point of a system that's been well tested.
Yeah. Absolutely.
I'm going to figure it out on the fly. No.
No, definitely not. That is, I don't remember when it was, but I think it was either earlier today or yesterday. But one of the videos that I was doing, I said, we don't believe in prediction, we believe in preparation. So, what's the only way to guarantee you're not going to have a baby?
Hmm. You're
Abstinence.
telling me it's not after the fact so much as it is before, huh?
Let's roll the dice. Like, no, we know what we know what happens. Okay, there's statistics to show that. What's the only way to know for a fact that you're not going to catch these types of moments?
Yeah.
There's only one way. You have to get out.
Get out.
This
So when
is
the
this is funny. We
starts,
have a tool called the hope slope, and
yes.
that's what I think that this kind of pattern, it reminds me of that name, not the tool, but
Yeah.
because you see the little bursts of hope right here, right
Yep.
here, 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 and it just never ends up going through. But then we go forward 1 year, starts looking better, goes flat, and then we get the actual um, trend up.
Yes.
So this is it's a very interesting topic that we could probably talk for days about. But let's look at some different actual drops here, and let's see if there's anything that comes out that sticks out. Basically, this one's one of my favorite ones. So in 1906, we reached a high,
Mm-hmm.
and the reason why it's one of my favorite ones is you had a previous high right here. The market
Mm-hmm.
went up to it, it stopped, it came back down, and it hit some support at that level where it broke out. And
Mm-hmm.
then you got a nice one again, the similar pattern emerges, and then you get this, which is very interesting given what our current pattern looks like right here.
Yep. Yep.
So we go back to this 1906, and there's a lot of similarities. So I would say right here, now I don't know what's going to happen. Again, I'm not in predicting mode ever, but I am in preparation mode. So what would you say that you're looking at when you see this particular pattern right here? And we got this
Yeah.
right here.
That's the thing about the research that is fundamental instead of just using technical math tool, because that's what you're getting there is a technical math tool. Uh, Almost every major crash, and I've studied lots of books, and if you don't know who Irving Fisher is, then you haven't studied as much as I have, which is fine. I'm just an idiot that way. Deep curiosity. So he's a guy that wrote books back in the 30s, as an example, about money supply and markets and crashes, and he's one of the guys that gave, through him and all this other work, research that gives me an idea about fundamental. And the way it works is almost every crash that's ever happened is for a lack of liquidity in the money supply. So the US government has an M1, M2, and all these other money supplies. So on a fundamental basis, when the government says, oh, we're just not going to let enough money be out in the market anymore, which is what happened in the 20s. And also, yes, so the money supply in the roaring 20s was up, up, up. More and more money was out there in the streets for people to use. And then in the late 20s, they started shrinking up the money supply. So guess what happened? The market starts falling down. So what happened in 2008, for example, is another money supply thing where credit was bad. And this is Goldman Sachs. So the bankers and all these guys, they did their things. And so you had in 2008 and moving forward for 10 years, you had a lot of bonds, quantitative easing bonds, trillions of dollars got put into the market. It's just look at the market because trillions of dollars is out there in liquidity. Well, the reason I have an opinion that is a little bit different because it's based on depth, not indicator, which is not something people should trade along. It's just one of those, I'm seeing that some of those bonds, I think it's about $400 billion, is not going to be renewed. which means there's $400 billion in liquidity, market money that's available to the planet, is going to disappear this year. That's the first of the 10-year bonds. Remember, quantitative easing. So there was a lot of money issued. And so now the money is disappearing. And if every market crash is related to liquidity, where people need money, but there's no buyers because the money's tighter, then what happens? Well, the seller has to sell for a little bit lower to find a guy that goes, yeah, you know, that's cheap at that price. I just have to have it. So my opinion is you're going to see a double top in 2018. And that's like at best, and it's a probable thing. Then because there's more of these quantitative easing bonds money gonna be disappearing off of the books, so to speak, next year and the year after that and year after that, you're gonna have to see people do a rebalance of their priorities for money. This means, like, you know, corporations that would normally be buying back their shares because they've got all this cheap money because the interest rates are low at the Fed and so forth, and therefore the banks, they're going to go, well, you know, I'm going to not go into debt anymore because interest rates are going to go higher. Right. And then what are they doing? Well, I have to sell some stuff. I'm not going to be buying shares. I'm going to go do other things. I have to generally just pay down debt because as interest rates rise. It's unfortunate that the way money supply currently is you've got governments and banks issuing credit, and they change how much is on the street. They just change it.
By moving some numbers around at will.
Yep, and they'll do things like the economy is too strong. So what we're going to do is bruise it so it slows down. Okay.
Yes.
And there's reasons that, you know, they want to do that, but this is part of the problems with capitalism. It's not perfect. Nothing's perfect. There's good things and bad things about it. But when they start tightening up the money, which is what's happening with the QE bonds disappearing, remember, they make it up. It's not like, well, we need more gold so that we can issue more money. They just hit the print button. Oh, look, more money's in circulation. It's all digital.
Yeah. And it's really funny. There's a great question in the beginning of a book. It says, how do banks make money?
Yes. Well, when you get into ratios of how much they have to have on book before they make a loan out, that's, you know, they call that fractional reserve banking. So they don't have $1 to rent out $1. They can have $1 and rent out $7, and they're making interest. They're making interest on $7, and they pay interest on $1.
So you're saying we give them money?
That's a bigger, different topic. Yeah. But the point of where is the market going? There's always corrections. I don't care what time frame, what year you look at. They all have these ups and then the downs, and this is where it becomes difficult for people to figure out how to make money. Well, listen, if you can avoid all the big losses, you get some small losses, and then you get some small gains and some big gains. That's what these charts do for you.
Yes.
It takes away all your threats of big losses.
And you're not sweating it out. It's green or red or nothing.
Yeah.
And that's it.
Yeah. And the rule is simple. On the first candle, you take your action. So the first red candle, you get out. On the first green candle, you get in. That's all there is. That's it. There's no complicated rules. The complicated stuff's been done. Now you're dealing with, well, what do I do now? Well, did you get a red signal? Well, then do nothing. So like for all of 2017, you did nothing. So 2016 in the spring, you got in because that was the first green candle. You had some white. We don't care about that. But the first green candle was right there. And so you presume that you got in at the end of that candle or the beginning of the next one. So, you know, you're in at 17,000 roughly, and you held on and you got kicked out because of the rules, somewhere around 22, 23,000.
There we go.
Yeah, 24,000. So it went up from 17 to 24. Great. You
Not too
got in
bad.
and out, and you're back in again.
Not too
Okay,
bad.
not too bad. So, anyways, I've added it all up and done the math. I did it by hand actually on this the first time, and this beat the buy and hold by a few percentile over all those years. Versus if you would have just bought the Dow way back whenever you did and hang on to it. I used to be somebody that sold mutual funds back 30 years ago, and I did that for a little while, and I got out of it because it's like, well, you're not really making any money on the deal. That's what basically got me thinking all these years later. It's like, well, how do we improve our results instead of just glorified savings account, which you still end up paying taxes on eventually. You're doing better than just putting it in the bank, but it's really not that fabulous a return to be a buy and hold guy. It's just,
Yeah.
there's got to be something better. Well, there is. And that's the result of it you're seeing is like, well, get in here and get out there, and you don't have to think it out. Test it to make sure you like it, but the stats are there.
Stats there, the wheels round, and there's a lot of things. So in terms of preparation, what would you say is the best way for somebody who doesn't have a lot of knowledge? Maybe they've been putting all their money into a 401k or something. They're just not really engaged with the market, and they had traditional advice. What would you say is a good thing for them to look into or possibly even do at this point in time?
Well, that book, Profit in Pajamas, is meant for people that don't know and just want to trust an advisor who's really just a salesman for a mutual fund company, who's not a trader. And yes, they have all these opinions of people in their back room, but they're not there to do the best job for you. I'm sorry, that's just how it is. That's been proven by lots of customers. So you can read something simple like that. It comes in PDF form. You can, get the hard copy book if you like, but the PDF is cheap. It's $3. It's meant for beginners. Gives you an idea of what's going on. If you don't know and don't want to work, and well, then you should just stay away, or, give your money to a guy that'll give you a mediocre return.
Yeah.
If you actually want to produce an income, that's where day trading is for. It's like, well, I don't have a lot of money, but I want to just follow cookie cutter rules for, bread and butter trades where you're just making 3%. How many people have you taught now how to make 3% on average as a day trader? Just like, within, what is it, 2 minutes you teach them? Not the teaching, but the
rules.
what,
The rules can be explained in under 5 minutes, and
right.
the rest is between their ears.
What does that mean?
Well, it means that the rules are very, very simple: greens or reds, and
Okay.
the exit is really simple. There's only two criteria. One is basically don't lose big time, and the other one is a certain time limit and stuff. So it takes a grand total of 5 minutes to explain the technical rules for someone to make on average 3 to 5% return. That's over 100 trades over a lot of different. I mean, there's people in their 70s that have done this. There's people that were, I think the youngest was 23, and
Right.
all kinds of different backgrounds. So there's no there's no set. You don't need to be a genius to do this. In fact, the more preconceptions you can leave at the table, the better.
Yep.
That's the X factor. Can you just do this, or can you listen and take simple instructions, or not?
And we've spent more than 5 minutes just talking about some generic, fundamentally kind of things about charts and whatnot, where in those 5 minutes, you're giving them, when that's green, you go do this. Kind of like what we just said. On the first green candle, you're supposed to buy something. And when you get your first red candle, after a series of whites and greens, you sell it and you're out. And you're saying that in 100 trades on average, these guys are making 3%. And I understand what you meant by what's in between the ears, because people go, well, it'll come back. No, you had a red candle, you get out.
Yes.
Yeah,
It's
but
green or it's red.
yeah, but it's not really red. It's kind of just little red. Only one can. I'm going to call that pink, and I'm going to keep going. And I'm like, well, all right.
This is not 50 Shades of Gray. This is green or red only.
It's pretty binary. And what most people don't understand is one of the world's best mathematicians is a guy named Bose. This is back in the 30s. And he was working with Albert Einstein. Some people know that Albert's kind of a smart guy. They were trying to use math formulas, Brownian motion in particular, where they thought, well, they could use that to beat the stock market. I am not kidding you. Yes, they did try, and they didn't succeed. So the point isn't, can a bunch of new folks come along and make new discoveries about math and so forth? It's like, well, you're not going to do it in a week, I'll tell you that. And these guys didn't succeed. So what is it that the average person brings to the game that some of the best minds couldn't solve? So
yeah, but
yeah, I'm better than them.
yeah.
Okay, all right, good. You have a nice time. You're going to spend a lot of time at it to do what? To pick up an extra couple of percent.
Yeah.
Where here on a chart, the wheels are already round. It's kind of like, you want to go get a tire, you go down to Costco or wherever. It's like they got tires, you just get them slapped on and you're done. Well, I'm going to make this new kind of tire. Okay, just for you? Or you're making a business out of the better tire? Whatever it is, it's like, you can just put it on and it works, right?
Right.
So, in this example, and people can, look at this chart all they want and get ballparks, or get, the software from you, and they can look at this particular chart and, add it all up. But the point about this is you skipped all the big losses. And the worst period of time was, I think, 2003, if you wouldn't mind bringing that up. This is the worst. Why? If you go back 1 year. It's the worst because you're in, you're out, you're in, you're out, you're in, you're out. And I guess it's 2004 and 2005. You're in, you're out, you're in, you're out. You actually make a stream of little losses because you're getting out and then it turns around. Oh, and then you get in and then it turns around. And then you get out and it turns around. And so you're actually losing money overall in those 2 years. But all the rest of the time, you're up. So that's the worst period there is. Whereas, there it's home runny kind of stuff. Life's good.
Yes, and you're making up, and it's one of those cumulative things. So if you're gonna have, here's the only way to know you're gonna do this right. You have to have rules that work, that are tested over time, and there you go. That's it. You stick to them, and you never break your rules because of that one thing we just talked about, the 2000, this time period. This happens all the time, especially in the shorter time periods. You get in, I call them creepers because they just kind of creep. They're kind of going upwards, but they're kind of going, all of a sudden it turns, as soon as it looks as good as you want to get in, it turns around on you. So you get in at the wrong moment, you get out at the wrong moment, and that cycle repeats and repeats. But you may lose, let's just say you may lose 20% during this time. Well, how much did you make following the same rules here? Way more than 20%.
Yep.
So,
and that's the other thing about the day trader you have is that it has strength. That's that market meter. Whereas this is pretty flat. It doesn't have a strength indicator. So there's nothing in that 2005 year that says, by the way, this is not a good time to get in. There's nothing in it. It's basically, two-dimensional, but it doesn't have like the 3 and 4 dimensions to it to say, by the way, although that's green, it's not a good green. It's just green. So, it'll overall beat what most people do, but it's not enhanced.
Right. Yeah.
So
and we're talking about some other very simple, maybe like 2 additional things to consider.
Mm-hmm. And yeah, that are pre-worked out for you, where it's like, well, when market strength is over 20, and there's nothing here for that, then it's like, yes, now's a good time to throw your money in because you've got strength of the market. Here, this is Dow, the Dow Jones Industrial Average. It's 30 stocks. That's it, 30. It's not the market. It's not 6,000 stocks. It's just 30. And on just so people know, on this particular chart, when you go back to 1920s and whatnot, the Dow was only 12 stocks because the world has changed quite a lot since the last 120 years,
Yes.
So, yeah, so you missed the big fall in 1929, but you rode up, in this case, all the way from 1927 to the peak at 1929, basically from $150, and you got out somewhere around $330 or something like that, let's just say. So you doubled your money in a couple of years, and you avoided the big dump, and then you got back in at cheap again.
Yeah. It's pretty obvious when you say it like that. And then we go to more recent times. A lot of people ask, what should I do? What you should do is understand, do some research, and it's already been done. So the book is a great resource. I've read it, I don't know how many, probably like 5 times at this point. But the ideas hold true, and that's what we're really talking about: is being preparing yourself for these moments that are inevitable, or at least historically inevitable, and not being a part of the downside if you're
Yes.
a long-term kind of guy or girl, whatever.
So the thing, when you say what should you do, the thing you want is a system, because it reduces stress and improves quality, and that's what computer programs do. Is they are systems. Are they good or bad is the question, but they are a system. And so if you've got indicators that paint color on something, that's part of a system. Is you doing a trade in an environment it's not hard to learn, then that becomes a system. And now what do? Well, some people drive to work every day and then they drive home. That's a system that makes money most of the time. That's a system. So there's lots of systems for making money, but you can be sure that there are lots of people that are in the multi-million dollar asset part. They don't usually drive to work unless they own the business. What do? Well, some of them are investors and traders and all that sort of stuff, but almost nobody that goes to a job has big income, and they don't have big time. Probably the problem with owning a business is you don't have a lot of time. You're actually, especially when you start out self-employed, you start out burning 15-hour days, 6 days a week kind of thing. And you're not making that much more money. You might even be making less.
Right.
So that's a system. And so some people become successful out of that. So the question isn't, well, what do I do, as much as what do I do? What is my avenue of system? Is it a job? Do I work for somebody else for 60 hours? Amazon wanted to hire me and pay, 7 figures. And I'm looking at that like, I do it because it's cool, but I wouldn't have any time. So no.
Thank you, but unless you throw some of that tea in there, it's not going to work out. The equation's all wrong.
Yeah, it's not my fit because I'm not that guy. I don't need, the social environment. Like, back in the day in the 90s, I could have worked for Microsoft, and I was like, no. And yeah, sure, they would have given, I would have been a millionaire with the shares options that they would have given me back there. But I tell you what, it being stuck in a millionaire group, just and working my tail off, that was just not a satisfactory combination.
Yeah, there's definitely other options out there.
Other options, that's right. How can I do that so I'm not sacrificing so much of my time in the long run? Because when you stop showing up for work, they stop paying you. It's kind of weird that way.
Yeah, and not to mention the cost of even having to go to work.
Yeah, exactly. Like in prep,
Yeah.
Yeah, so that book, Profit in Pajamas, the whole point is you don't need any prep work to show up for trading other than, have your computer on and be ready mentally, know what your trading rules are. And it's just like, what am I doing? I'm just going to follow the rules. That's all I'm going to do. And what am I going to do? I'm going to bank some money. Oh, and so sometimes I'm going to lose a little bit. Yeah. Am I going to be there for any of the big losses? No. So, day trading is just this, what you're seeing here, but on a smaller time frame and with better tools. Like that's already one of the best tools there is for investors, but better tool for day trading. We have all that. We use things like, the microphones, they only pick up a certain quantum of sound. Otherwise, they can't pick anything lower than a certain level of sound. And so there's people that figured out, well, how do you hear something that's below the threshold of the noise of the microphone? And so they have a way to do that. And so in that kind of like, well, that's cool, we applied that to the day trader. So the day trader actually has things you can't hear, so to speak, built in there, where it's like, no, we know because we're doing all this math that there's something coming here.
And it's pretty obvious. It's green and red.
Yeah, green and red is all you care. Who cares about the math? If
Yeah.
it's done, it's done. I'm like, just give me one of those. I am not making tires. I will buy tires.
Those are the best tires because they're winning all the races. Oh, I'll get those.
I'll get those. I am not making a tire uh, manufacturing and research and R&D kind of, people think, well, I'm just going to go in the stock market and I'll figure it out. It's like, that is the naive part. And I appreciate I can do better than what most people I run into are. It's like, I appreciate that kind of thinking. I do. But would it not be better to start it with something that already has most of the hard work done, where you can just, if you want to, try and make it better? Or it's like the tortoise and the hare, that story. If the tortoise in this case just got in the car and started driving down the road slowly, but the hare was like, I'm going to spend a couple hours here in the store and figure out which tires might be the better. But I have an appointment I want to get to. But I'm going to spend more time figuring out the better tires, or just get in the damn car.
Yeah.
Start driving. Yeah, but if I get these premium tires, I can go 200 miles an hour. Yeah, but you're still driving on the street, right?
Your engine cannot go 200 miles per hour.
Yeah, and there's just a thing called people in traffic, and I'm like,
Yeah.
the guy that just, and there's a saying, it's a Chinese proverb. It says, when was the best time to plant a tree? Well, today is good, but yesterday would have been better.
Yeah. 20 years ago, when's the second best time? Right.
Yeah, right. 20 years would have been even better. But if you're starting tomorrow, well, then that means you haven't started. And if you want to poke around and figure it out, yeah, poke around and figure it out. It is your life. You can do what you want. My view is the sooner I get to the beach and I don't have to go to work, the better.
Yes, and we're not talking about, so this is something that I've been pretty interested in because being a day trader and being in the culture, our culture, we have a really good one. The perception is when you come to this realm is you need to do a couple things to be successful, and it's totally wrong. You don't need to make $1 million in one trade. You don't need to do that regularly. You just need regular consistent gains over time, and
Yep.
that's it. Because you're going to build to a level like Warren Buffett. Now I don't know, I'm not saying you're going to do that. What I'm saying is if you have more money, what is 10% of $1,000 versus 10% of $100,000?
Yeah.
Now, if your system works, that's the kind of leverage that you can apply. If you're still messing around playing games, wondering if you're going to time the market perfectly, well, you're going to drive yourself crazy and lose a bunch of money in the process. It's pure math. It's all right here. It's easy.
Yeah, there's nothing weird and new going to come in out of that system. The system is the system. You're not going to see like, oh my God, I put $1 in and it became $1,000, in 1 minute. No, no, it just isn't happening. And people hope and want that, but then for what? It's like, did you spend 20 years trying to figure that out, which is against the nature of the system, that the environment, it doesn't support that. It means it's not going to happen. So yes, the day trading is a faster way to make money than the stock market. You can, like you say, 3% in a few minutes. It's not every day, all day long, but you sit there and you look at it and go, okay, bing, I got my thing. That's my 3%er right there. And you go bank that, and then the next day, you're not sitting there all day. It's like maybe the first hour of the day that the market's open, that kind of thing. And it's like, well, so you go do whatever else you want to do, but don't expect it to become a zillion percent in 1 minute. That's not realistic. And people say that, but we don't, oh, well, I'm better than that. I can, I'll no, it's, gravity is, 9.8, meters per second, on this planet at the surface. It's like, yeah, but I want it to be 1,000%, and meters. No, but it ain't. Okay.
Yeah.
It's not.
That's not real.
Yeah. I understand hope. And yes, there's a few rare cases of people doing this and that. But out of 8 billion, what are your odds? Oh, well, I guess. Yeah. Okay. So that's the pragmatic, practical. Okay. If I get tires, put it on my car and get in the car, I'll start moving and I'll get somewhere. That's right. This whole desire, most billionaires are unhappy. So people are working hard, driving themselves nuts, getting to a goal where they're miserable. The reason the billionaires are miserable is because they thought that money would make them happy. So they're charging hard to get to the money so that they can, go, oh, well, I've got this, Manhattan apartment, and I've got this and I've got that. I'm like, okay, so you got a bunch of stuff, and you feel good because you tell people what you have, that you're the big winner. Well, the stats are happiness is not in that high income group. Now, yes, there are people that are happy in that group, but statistically, they're not the happy people. That's a subject another time. The point is, if the pursuit of happiness, you don't have to actually go out there and drive yourselves nuts trying to make money so that you can be happy. I understand getting rid of the misery of being poor. I'm all in favor of having people not be suffering because they're poor. But there comes a point where it's like, this is the middle ground we're talking about, where you have money and happiness and time. And people think, well, the billionaires have that. No, they're trying hard to scrape another, few bucks so that they can say, I moved up 2 points in the Forbes 500 list. I'm like, now I'm number 403 instead of, 405. I'm like, and for what? Well, then I have more power. I can do and really? So that makes you feel good. Yeah, it makes me, okay, great. So you keep digging hard to be happy instead of just, okay, you know what? Enough is enough. You know that quote?
Enough is enough.
Enough is enough. When you know enough is enough, then you have enough.
There's quite a few lessons in that one right there. Absolutely.
Yeah. And Jess, he posted it on your website, that article on his by the greed. That was brilliant. That was like one of the best things I've read. And it's, short, but it's got so much good information in there and in basically very few words. And he quotes that at the end, and it's very appropriate.
Yeah. Coach Jess, he's a special dude. And just like all the rest of our coaches too, everyone goes through these things where you have your emotions kicking in. And what is your plan? What's your plan? Do you have a plan to deal with it? And oftentimes, like, what's your trading strategy? Are you sticking to it, or are you letting your emotions hijack your behavior? So, we're over here, we're dealing with, by the way, things are great right now. Things are great right now. Look at this. This is as high. We are almost as high as it's ever been. Money is cheap. It's the cheapest it's ever been. Is that correct?
And well, it's one of the cheapest for such a sustained period, and there's so much of it.
Right. So you got all these massive conditions, but what do we know happens when those conditions meet reality. Oftentimes you will get big corrections. The timing of it, all that kind of stuff has to do with
Mhm.
different things like money supply and access to money and what else is going on with elections and all this other kind of stuff. But
Yeah.
again, it's not important for the person, for the trader that has their rules dialed in. They don't have to worry about it. It's a
Yep.
great way. It's a great way to live. It's a great way to make money.
Yeah, so you'll notice that some economists are wrong, and they get quoted in the news thing, and then you go back and read, because I've done all this kind of stuff. Well, which economist is the best one? Like the advisors on MSN Money Central, and I should listen to. Oh, and when this guy says something, I should do the opposite of that because he's wrong most of the time. You can spend a lot of time trying to carve out a better. That's what I did. I spent crazy amounts of hours trying to figure it out, studying all the things that I did. That's actually the reason I put out the book Profit in Pajamas is, you know, here's an easy to read story that gives you the beginnings of it. It's not meant to give you all the technical analysis. It's meant just to be easy to read. You learn something and you walk away empowered, and it's cheap. It's $3. I think Amazon keeps like 90% of that money. I don't care. I want people to have that. And this is the point about, well, you got to figure it all out. No, just if somebody says that it's green and I just buy it and it works, almost always, a few times make a little bit of loss, but that's part of a system. Well, let's just put those tires on my car. I'll be fine. That works. And when they get wore out, I'll come back and get another one, right? Why are we stressing about that? So now, instead of trying to invent something that nobody actually cares whether you invented it or not anyways, you actually have time to do the thing you like to do, which is whatever it is. The things you'd like to do, some of which we forgot. Like when we're in our 20s, we go, oh my God, I'd just love to do this and that, not feel guilty about playing video games or whatever the heck it is you want to do. Or whatever the thing is. Usually the thing that people don't have in this world of technology that we have is time. We're spending more and more time at the office to make ends meet or to get ahead. Well, that's one system. You can use that system, or you've got people that repeatedly, testably make a regular amount of money in the markets just following simple set of rules. What's wrong with that?
It's a good question.
Nothing.
I love
Let's just do
questions
that.
that don't need answers.
No. It's like, you don't need to ask, well, why not? It's like, it's just, is that what you want? It's that simple. Well, I want this or you want that. Great. You have lots of choices.
Choices. Yeah.
A lot of people in most countries don't have choices. Like big chunks of the world don't have choice of what they can do. If you talk about Venezuela or Iran or Afghanistan or, Africa, it's like, what would you like to do? Well, I'd like to, but,
Yeah. Or they don't
guys,
even know, they're not even aware that there's an opportunity out there. So it's not even a question of choice. They're
yeah.
choosing what will keep them alive. And
Yes.
we're over here talking about real fun topics like, oh, let's try to make a little bit of money. Let's improve our quality of life. That's already fantastic. So, keeping things dialed back to reality is always a good thing to practice over and over. It's like, you know what? Time is very important to me, or whatever it is that is important to you. Following those virtues, those values, those principles, that's gonna keep you going through this stuff. And it does take a little bit of time for you to get your brain wrapped around the
Yeah.
simplicity of this whole thing. And that's actually the hardest part that we find with people is when they
Yeah.
come on board, they have a problem with how simple it is.
Yeah. Well, we've been programmed that way, and really, not a lot of people know what you do. So it's kind of like you're the guy that built a microwave back in the 70s, and you say, "Well, I've got this thing," and you just put it in this little box, and you push a couple things, and then a minute later, the water's boiled, and people are like, "Nah, come on, you're a nutcase," and nobody. That's no. But we've been programmed because of what was available and how society and culture and all that works, that the pursuit of happiness, no, not be content, know enough is enough, go to work and enjoy your life. And there's cultures that have that attitude where it doesn't matter what you do, it's what level of authenticity and enjoyment do you bring to your work. Instead, we look for things literally to make us happy, when really that's backwards. Is happiness starts from the vibration that's in your mind, heart, attitude. But I know the planet still has a long way to go in how we culture and teach people about, no, you generate happiness. It's an emotion. You actually generate all your emotions. Yeah, there's things that we get triggered by, and but there comes a point where we can actually learn how to be happy, like as a choice, like choose to be happy. And it's like, well, if you're happy, then you're not pursuing it, okay, because it doesn't come from outside anyway. It's not the sustainable kind of happiness. And then then it's like, well, I just need some money. Yeah, well, how much you need? Well, I want this. Okay, great. Well, I hit that goal. There's a friend of mine who made what some people would make in a year and a half. He's made so far in the first 6 months of this year. And so he's realizing that he can actually probably double that in the last 6 months of this year. Like that would be like, yeah, that was beyond what he expected to do. And the point isn't what he's doing. The point is that he's doing something different. And he chose to learn what he needed to, and he spent a bunch of time, but now he's got his system for what he does. And he can see that that's just going to keep growing with throwing more money in the game, because it's a machine. Machine doesn't care that, you put $5 in or $5,000. It says, okay, well, you get so much return on whatever money you throw in. Okay, done. There you go. There's your share. There's people right now that make two aggregate, if you add it all up in the E-mini SPY, $200 million are made per week in that market. $200 million.
Wow.
Whether it goes up or down, then that means there's people losing that money, but there's a reason that makes sense for them. Anyways, it's like Forex. There's people making and losing billions of dollars. It doesn't mean you have to play there, but the system doesn't care. It's like, oh, Joe, you put $5 on that. Here's your interest on your $5. Oh, here you put 50 million on la la la. So like, but Warren Buffett, he bet the wrong side of that. Hey, Warren, thanks for the 600 mil. We're going to go pay these guys out because you were on the wrong side of that. Okay.
It's red and green.
Red and green. You picked the wrong side, buddy, because you're a newbie and you didn't use a system. You just did whatever you did, and hey, you just paid a bunch of people. Good for you.
Yeah.
Keep coming back.
Come on back, and the brokers we'll give you a bunch of free stuff. Keep coming back.
Right. And so this is where people get scared and they go, well, I could be that guy. I could be the Warren in this case and, paying it out. And I'm like, yeah. Or you just test a system and have rules. Every time, this is 118 years, including that, it's 119 years, including 1900. So you skipped all the big losses, all of them, by design. Oh, so if you get out of the trade after 2 minutes because that's the rule, and the market turns sharply on the 3rd minute, and you weren't there for that, woohoo.
Yes.
That's the design.
That's the point.
Yeah, and it's been tested, and people can test it. Oh, yeah, no, test it. Get the replay, play around with it, prove it, talk to people, listen to testimonials. It's like, no, the damn thing works. Well, I stuck it in the microwave and, I didn't push the buttons. Yeah. Right? Yeah. How'd you know?
I got the same golf clubs as Tiger Woods, but I don't seem to have the same score. That's because you don't know how to use them.
I think Tiger had, how many coaches? 3 coaches at one point. You don't need that many coaches, but his thing was he did the practice like, all players do. Get out there and get on the field, get to know the stuff, master the game, and you could be good at it. And you don't need physical attributes. You actually don't want to be too smart. The people that are I'd say the 120 to 135 IQ, they're going to do better than the guys that are 140 and higher, because they'll actually follow the rules. Well, you know, right now in this moment, I think, no, 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 you're not supposed to be doing the thinking here, Albert.
Yes. Don't do that.
We don't need some on the fly Brownian motion here, Albert. What we need is, you know, push the buttons and you get your result. Oh, yeah, it's like that. It's a system. If I turn the key, sit in the seat, push the gas pedal, I get a result. Yeah.
Yeah. It's pretty simple at the end of the day. We're at this point right here where everything's good to go. Question I asked one of the students before because they're asking my opinion on this, and he's like, you know, what should I do? I was like, well, do you have what you need right now? He's like, oh yeah, I'm killing it. Well, if you don't want that to go away, there's only one way to make sure that you know for a fact that you're not susceptible to a big drop.
Mm-hmm.
And that's a fact. So that's a by design thing. So we
Yes.
got green, we got red, and actually I haven't followed up to see how he's gone out and planned to make his moves, however he's going to do it. But you just got to ask yourself those questions all the time. What's the way to prevent the tragedies? Because
Yes.
we're not. This is interesting right here. When we go back to this example, so you sell right around 360. Let's just say, let's call it 360, 350. That's a better number.
Yeah. Yeah.
And then
350s.
you don't get back in until, so you have at that point, if we have one share, you have $350.
Yeah.
So what's the value of that $350 when it starts going green again? Around 50, 70 bucks. There we go. Right around 70 bucks. So you're not talking about half the value because you have so much more from not being involved.
Yeah.
And then your leverage quadruples or more.
Mm-hmm.
It's not like a,
You got 5 times the buying power with the same one share that you would have had.
right.
And you didn't have to figure it out.
You didn't have to do anything but follow, just get out. So here we are, we're almost there. Wherever we are, we're almost there. And so let's say we do a double top. Let's say it goes a little bit above, or let's say it just goes down. Which one do you care about the most? Probably going down. I know that that's where I'm falling.
Mm-hmm.
So there's ways that you can mitigate those, like getting out of certain things, getting into other things. Education is going to be a top priority right now while there's still time. Profit into Pajamas is a great way to start.
It's an easy read. It's a story. And that's why it was written that way. It was originally going to be a technical book in the sense, well, you know, this and this about money and then. You've heard more technical stuff here than the book has. The book has, it's relatable to people. And that's the whole reason the format got changed, is to say, well, we're going to do it in story form. And it's based on real people. Like every character in that book has a real human being that is that person in many pieces of it. Like I know people that have gone to wealth managers and they're paying whatever money they are and they're not getting ahead. And I have talked to them and said, listen, you know, this person would like to buy some Amazon or something. Would you allow them to do that in their account? And they go, no. And, you know, then Tesla and Amazon and all these ones, they're going up like crazy. And then, you know, they're not holding that and they're barely making above break even. Well, if you know, the stats for hundreds of years is all the same. Thousands of brokers, they're become a statistic. This is what they do and this is what they produce. There's a book by O'Shaughnessy I just gave to a friend. He wrote What Works on Wall Street. And this is another one of these data-driven books that, yes, I studied and tested. It's like, this guy's actually, you know, honest about a lot of stuff. All the stuff in his book is honest. And he had one of the best performing mutual funds on the street. And he was doing, let's say, 12% a year on average. I don't remember the exact number. And the rest of the market's doing like 8. And it's like, and he sold out his fund and went off and did his own thing. which is another whole story. But it's like, well, what should I do? These Shaughnessy guys gone. And it's like, well, I should go over here and go over there. And it's like, well, you'll have to figure it out if that's what you want to do. Is if you want to figure it out, you'll have to figure it out. But if you just want to use something that actually you can test, which, where have you been where you can say, I want to test what you got over multiple years? Like everything in your day trader is based on stuff that works for decades, not for, well, this little blip. It's not tuned, which is what some of these back testing tuning, like you were saying about changing the rules, people do, is they change the rules all the time because, well, that one, did well. Well, that's like listening to the news. It's like, well, the Dow went up today because blah, blah, blah. And it's like, it didn't go up because of that. It went up because more people bought shares than sold, and they were a little bit more. And so the seller wasn't going to sell at $2. They were going to sell at $2.50. And because they knew there's more, the market's good. So, the Dow dropped because blah, blah, blah. And it's like, whatever. That's all the story after the fact. It doesn't help you when what you really want to know is, okay, first green candle, I'm going to take action. First red candle, I'm going to take action. Everything on the news, that's entertainment, because that's actually what it is. These guys that are newscasters are paid actors.
Paid actors that speak really well.
Yes. Well, something happened. Yes, that's right. You are totally right. Something did happen because, not going to listen to that part. Oh, and by the way, the chart will tell me something happened. Look, it's got an up candle or a down candle. Okay, something happened. Do I need a guy, to tell me? That's where they, unkindly call those people talking heads, but functionally that's what they are. It's like, well, this and this and that, and the market looks like, well, you're giving an opinion. You're going to pay me if I follow your advice and I lose money? No, nobody does that. Okay, great. So then how good is your advice? Oh, well, I want to see a track record of your advice. Well, we don't have that. Oh, well, where can I find track record for opinions on anything? That's called building a system now. Well, why don't you just go look at this? Well, I got green here. That seems to work most of the time. Yeah, it does. Okay.
Done. On to the next thing. What else is out there? I'm gonna go check the beach office real quick.
That's right.
That's what you do with that.
Yeah, it's like, well, okay, I got that handled. Now what? Well, I'm gonna figure out what I want to do with my free time. Oh, so what should I buy, a Yamaha or Suzuki, or or Harley Davidson, or should I give my money to charity A or B, or should I spend more time with sick children or elderly, or should I just I want to grow vegetables because I like doing that when I was a kid? Yeah, those are better questions. This money thing is done. I know that's a weird thing. People are going to be disbelieving about that. What do you mean it's done? It's done.
It's done. The verdict is out. It's not work. It's nothing. They press a button. It's printed. They can, the supply. It's controlled, and it's basically a way to keep people. Hey, congratulations! Welcome to Earth. Here is your job.
Yes.
What do I need a job for? Well, you have to make money. Why? Because we have to pay people money for things. Why? I can't just go.
Yeah, well, you need to feed yourself, and you really do need to look after yourself individually. That's the thing about being raised from childhood to a functional adult. You got to pay for your own food. That's just the way it is. You want a roof to live under, you got to look after that. It is up to you. It's not up to other people. And some people want to shed that to other people. Well, you do that at their mercy and their disposal. And so when people talk about the universal basic income, those people, do they have freedom to increase their income? Probably not. So it's the new SURF class, except SURF is not the SERF, it's the SURF for, go browse the web all you want. Surf all day. but
Yeah.
you're a serf. Just so you know, you don't get to, move to Paris because you feel like it. Well, what about my UBI? Is it going to follow me? I don't think so. Well, when there's a global UBI, guess what? You're going to be an average income. If you're happy with that, awesome. Make art, play, the game, go become a master at that, or just play for fun, play video games. We're not saying one's better. It's about systems that allow and create choice. So like if you move to Africa, as you and I were saying, is what's on the menu of choices? Not a lot. People that live in what's called the Western world, which is mostly just capitalism, have different, in some cases, better choices. That's all. But yeah, you want to go for, don't want to work at all, do nothing. I want to just do art. You can. It's really, we're living in an amazing time that people are going to get to do that.
We are in a time of abundance, that's for sure. Now, prepare for the scarcity. Prepare for it so you're not sitting there looking around saying, "Oh, this isn't fair," and that and this. Like, no, that was your own. Yeah, the system is designed to. I don't want to use trick, but it is designed for you not to know the facts. We know this. There's information that you do not and cannot have access to, that if you did, you would be behaving differently. We know that.
And there's no power over it. Like you look at all the changes they're talking about with Social Security. Do you think the old people that, signed up and did all that kind of stuff and went to work and donated parts of their wages, they don't have a single say, hardly, like effective say, I'll put it that way, in, well, that's my money and, how come you're giving it to, refugees and all that stuff? It's like, yeah, but it's in the trust of the government. It's not in your bank account. That's the difference. And if you're going to be one of the UBI people that's coming, if the government changes their mind because you get a different president that comes along, he's got all this power. He just says, nope, we're going to make a cutback because, the country is suffering. We've got too much debt. We've got trillions of dollars in debt. And these people are providing no value. They're just a weight. And enough other people say, yep, guess what? Done.
Yeah, and that's happened several times. And just think about it from this perspective as well. If you've been working your entire life paying into a system that was supposed to protect you in your old age, and then all of a sudden this new generation comes along and they have more information than you did at the time, and the system's changed a little bit, why would they pay into the system to support you? Now, we know that, you probably, it's like there's other things at play here, but the point is they're too young to have the experience and the wisdom to understand what the big picture is. They only see it from their perspective. I make this much, I have to pay this much, but for what? If the system's on the verge of collapse, or if whatever, it doesn't, I'm not assuming that it is. I'm just saying, if this is the case, if that is a risk, why would I put money into it? Well,
and so the lack of control is really the key item there. It's like, but I have to because it's the government. No, because you're in a system called employee. Notice, ploy is the middle word of employee. You don't like to say that, but that's just how it is. It's like, well, no, to deploy, and it's like, yeah, however you want to make the word use. Sure, you're useful to a company, but you don't control the company. You don't control much except what your paycheck is, which even then, the government is in there sometimes before you are with the deductions and, employee payroll deductions. It's like, so there's lots of systems. There's nothing wrong with that. That's great that there's choice. The question is, some will actually see the other systems and go, I really should go over here, and it'll take a bit of a mind change, but I'm going to go over here. Okay. There's just as a related item about, new possibilities. There's someone that rents out a basement suite, but they say it's got no kitchen because it's illegal suite. If it had a kitchen, they'd have to pay taxes and do all that stuff. So they realized that they could still rent that out with no kitchen because, hey, we've got microwaves. People go out to eat. There's order in. There's like websites where, skipthedishes.com. Just, click, 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 food's delivered, bing, bang, I'm done. So he gets to rent out his basement suite, which would in a previous area be unrentable, but it works. It's like, this is the whole thing, a microwave, man. You just click, 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 and I don't need a stove. I can do it this way.
Yeah.
So there's lots of choice.
A lot of choice, but you don't want to go out there and start making decisions. You gotta, one of the first things to do your research, understand the rules of the system that you're playing so you understand what your choices are. You're more aware. That's critical. And then look at the data. I mean, we're sitting here staring at 2018. We reached a massive high, highest it's ever been. It's not even close. And now we're playing the sideways game, looking like we're getting a local breakout, possibly to maybe test the previous high. And if it does, there we go. That's it. But here we go, back on the same topic. What do you do and why are you doing it? You can do the right thing for the wrong reasons.
Yes.
And that's going to get you into a lot of trouble because it doesn't work all the time. It's not a system that works. So educate yourself. If you can't tell, we love talking about the philosophic aspect of these things because it's very important. And that's something to consider as well. It's like, why am I putting my money in the market? Why am I putting it in right here? Oh, because it's green. Oh, that's a great reason. If you're putting your money in your market here because you got a blue or a green candle right here, that doesn't make sense.
No.
Yeah. So there's a lot to consider in the wide world of the grand scheme. And one thing, you know what, Alan, can you touch on this real quick? So you've been alive for a while. You've had perspective that a lot of people that are going to watch this video do not have yet. Maybe they're in their 20s, 30s, or whatever. And, I can tell you it's something in young people to feel like now I have to do it now. Now is the time. Well, if it's not good now, what can I do right now and this and that? Because it's not applicable to them or they feel like it's not right now. But as we see, when you go back to 2008, so when was the one before that? 2002. And then the one before that was in the 70s and a little bit in the 80s. There's opportunities that come around that are like once a generation. But how frequent do you see the opportunities are for these really big moves? How many opportunities do you see over time in your time here?
Well, the really crazy big ones, it sounds and seems like that, oh, well, you should have got into the internet in 1991 kind of thing, right? And but what people don't remember in clarity is that during the 1995, it was sideways and people were going, oh, well, the internet thing is dead and we should get out of it. And there was actually, big market people like heads of banks that were saying the internet's garbage. You got Buffett and all these people saying it's garbage and you should get out of it. Meanwhile, in the back room, they're buying it. And the point isn't about the whole market. The point is, what about an individual stock? Like, who was Tesla? Who was Netflix 15 years ago? Well, they had an idea, and their idea was a great idea, and people made huge money off of that. I actually made I don't know if it's available anymore. I made a video on, it was a pilot for a TV show. It was going to be, but I quoted that, STZ is a great stock. I don't know if you can bring up STZ on your charts there. If you go to the all list, and Constellation Brands, and STZ means like stars, right? So Constellation Brands, what they do and how they do it, so there it is. Now you go to the multi-year chart.
There we go.
Yeah, there you go. Make that big. So it was when it was around $30, maybe it was somewhere around there, that I said, this is a good company and it's a good time to buy it. So that would be 2013 roughly, that I said, that's a good, and you can't edit YouTube videos, right? So it's like, once it's posted, that's it. You don't get to modify and change it. And it was like, well, how did I pick that one? That's a great question. I'm not going to do that here. And who cares? It's like, what if there was a list that says, by the way, STZ's good because this, that, and the other stuff. You actually have most of those tools in that program you're using right now, which, there's the good stock and all those kinds of things. We're not going to go into any of that, but the point is, it's history. It's like, well, companies that do this usually do well. Oh, yeah, it's like that, even in a bad market. So what did that stock do? It went from $30 to $200 in 3 years. Oh, well, that's not so bad, is it? Well, what if you had a few of those? That's a huge rate of return. Well, it's not going to happen again. Really? Happens all the time.
That's how it works. If you can
That's how it
do
works.
something that no one else can do in your sector, or maybe you invent something new, then
Yeah.
there you go. It's a pretty easy equation at the end of the day.
Yeah. So how do you find those next, gangbusters? Well, you can do all the work we did, and there you go. Or, I'd like to get a couple tires put on my car. Yeah. Okay. We got that.
Yep. Or you can head on over to this list right here.
Yeah. Which, has a lot of details of all kinds of stuff. And it's got rankings and ratings and book values and, all that kind of things in there that are useful. That's how I figured it out, because I use the bunch of numbers that I was already working on. Anyways, so there it is. It's done.
What's really funny? We have a lot of conversations on a wide variety of topics, and I don't think we've talked stocks or actual like particular trades less than probably 5 times.
Yeah.
And that's over the course of 6 years now.
Yeah.
And
Yeah.
it's the point is you don't need those. Those are opinions, and we don't like talking about opinions. We like talking about process and practice. It's like,
Yeah.
all right, well, if you say STZ is good to go, then it will show itself on the chart, and look at what happens. It needs no introduction. Whoa, look at that. Unbelievable. It's 10
Right.
times the value of that it was in 2012.
Yeah. And like, how did you pick that? How did you know? Well, that's what we do. That's the kind of nutcase I am, is I'm curious about that kind of stuff. It's like,
Thank you for that, by the way.
yeah, it's like, well, why would you do that? Well, that's what interested me. And it's not like I picked 20 stocks and only, and have 20 videos and I deleted the other 19. It's I made one. And it was like, this is an example of a good one. Why? Because it fits the patterns and behaviors. Like if you go to Apple, for example, and you look at how Apple did in certain eras, and you go look at Microsoft and you go look at how they did during certain eras, and it's like, well, what's the recipe for a stock to explode? And it's like, you know what? You guys can go out there and you can go repeat all that work and figure it out. Or you can just go, hey, now I've noticed you've got some greens and reds on that chart, and this is monthly. So you're telling me that if I would have bought at the beginning of the green phase.
Here's the reveal.
And I would have sold on the first red one, and then I'd buy back again on the green one. How would I do? Now, you've got a button at the top there.
The magic button.
Yeah, it's the third one, I think.
Yes, it is.
So 842% in 9 trades. And it's got a bunch of other markers in there you don't need, but you got that
it
green.
doesn't work. It doesn't work. There's no way it works well.
Right. So that business of that, remember we said that it was pretty flat, 2-dimensional, the Dow, like there's nothing there. It
Mm-hmm.
needs that extra quantitative. This has a bit more quantitative analysis in there. Quantum just means, you know, a number, value. But there's some that are bad stocks that, although the trading system might lose money on those stocks, you actually would have to have a filter that says that one's not a candidate. I'll tell you, and this is in that book, Profit in Pajamas, what's the easiest candidate? Well, back in the day when Apple was first getting around talking about what they're doing, that was your early markers. Oh, I should buy Apple because they might actually do something. Has Chevron, CVX, you can bring up that chart if you don't mind. Is Chevron doing anything new? Simple question.
No, they're not.
They're not. And some wealth manager put someone I know close to me into this stock and into Boeing at the same time. And I said, you know, first of all, what is Chevron doing? Nothing new. Oil prices up and down. Yep. Where's the future of oil? Well, we'll still use it for lubricants and whatever else, but you know, where's the future? And remember, these are wealth managers with a lot of analysts, and we've got all these expertise and, you know, blah, 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 blah. And guys with, you know, decades of experience. And who are you? And I'm like, okay, you don't know who I am, and that's fine. But I have a chart here. This is a really good, useful chart. It says like, so you made 158% on 7 trades. Okay, good. Now, if you don't mind, let's go look at Boeing. But notice the behavior of this stock. It's not a good stock. It's not up, down a little bit. It's up, down, up, down, up, down. So whereas this one, and I told him that this was in 2016, before it had the big run up, I said, I like this stock better as one to get into, because first of all, about future and this and that, it's still holding the last trade, it says there. So it's made more money in the same number of trades, 9 trades, but it's made more money. But it's less erratic. And well, it's who's making planes? It's Boeing and Airbus, and you know, a couple other smaller ones. But it's like, well, who makes a better plane? Well, you know, Airbus could, and this and that, but you know, oh, Boeing's also in the aerospace, and it's like, oh yeah, well, they, you know, you can get into all those long conversations, but the short one is, you know, who's doing something? If they're doing something, doesn't that mean there's an opportunity? Like, who's the biggest store online in the world? Amazon.
Mm-hmm.
Well, you know, well, when was the time to get into them? Well, long ago. When Microsoft was starting going, the best computers were word processors. People didn't think about computers. They thought about, well, I need a word processor, and word processors are going to rule. I see. So how's Nokia doing when it's just a phone with a couple things in it versus Apple, which has a zillion things in their phone? How's that doing? Well, oh, Nokia's out of business. And they were the biggest. Yeah, but you know, yeah, they were the biggest, and now they're out of business.
They didn't adapt.
A change happened. If you want to know how to be a better investor, Netflix versus Blockbuster. Who's going to win? Well, this internet thing's a bubble. It's crap. Thank you, Warren. Bet you didn't buy any of that. You missed out on more billions.
More of it. You could have been happier.
No, he wouldn't be happier.
Oh my gosh.
So happiness is not money. What the big boys on Wall Street tell you is not what they do. It's what they put you into.
So they can
Or in the retail side. Yeah. There's a lot to know about investing, and you don't need to know all that kind of stuff. Hey, but if you want to dig deep, you can. Maybe one day you might want to set up a week getaway where, you know, I'll tell people all this deep knowledge, but you know, most people, they don't need it. They don't care. It's like, it's green. Yeah. Okay, good. I'm looking for a thing like that. Yeah, there it is. You just, you know, green, go buy it. It's red. Oh, I should get out of it. Yeah, pretty much.
What's hot right now? Oh, if there's only a way to know that. I'll go ahead and start by the eye. Let's
Yeah,
go
do I come around your house and update the software and the databases every day? No.
virtually every day.
I don't even do that. I got computers that do all that. And I did that for me. Yeah, see
Yeah.
that. I want you to go look at Lear if you don't mind, or there's Ford. What's going on with Ford? See, there you've got super details about how a company's doing in a glance. In seconds, you know what's going on with Ford. So the top quarter, and Amadeus is in charge of the trend trading and all this stuff that comes with it. It's got pretty good ratings, Ford, right now, but the stock is going down. So is that a good thing to buy? No. One side's good, other side's bad. Well, you don't want that. You want stuff. And yeah, you look at the chart and you go, I don't know. That long-term trader is not in that trade. It got out of it. See right there in the corner, it's look that you've got there. Yeah, it says, well, I'm not in that one. Yeah, it's out. Got in because it looked like it might work, and then it had a big red candle, and then it kept going. So that was the right decision. Get out. It's not done falling. It looks bad. But Lear, I think that's
Lear.
LH. You can look at all these things. It's all there.
Lear as in which
Sort
one?
sort by company name.
Okay.
Yeah. And just type in LEAR.
Lear is doing. Let's check it out.
Right. So let's look at that. That was a good company to buy. Well, how did you know that?
There's
Well, you
monthly.
see those little red bars you've got on the front? The red bars are getting bigger. And the proportion of like net income has been pretty stable. Most people don't care what EBITDA is all about, but that's okay. It's it's a good business, and so it has a good business. It had a good business rating. It currently is not a thing to get anymore, but there was a while that it
How
was
did you
a
know that? How did you know that it was not good?
well. That's the business about charts, and so you're blending. Just because it's a good business and people aren't buying it, that's not good for you. That's belief, right? Belief drives the price, but it's how many people have the belief drives the price. So if people believe that Lear's a good company, that's where speculation goes in, and the company goes way up in price, but it's a garbage company. So they're not actually selling stuff. They're not actually building things. Well, that's not a good business. That's a speculative investment. So this is where a lot of these core pieces were built. So that's where, how did I know STZ was going to be a good company? Because it had the chart, it had some industry stuff going on. I did very little analysis. It took me maybe 10 minutes to find that stock. 10 minutes. And, I looked at maybe 30 stocks that were on a short list, and I said, okay, I like this one because it's got all the things going for it. It's not got all this and that. Well, now you've got most of that. This is before those ratings by quarter came in. I was doing it a little bit manually. Well, now it's like, no, these are the good ones. Done. But it's all based on real data, on analysis, on behaviors and patterns. And we don't have to think it through and go, well, I don't know, and maybe. And, we're not gambling here. Like, I want to see a pattern develop.
Yeah, show us show us what the big money's doing more accurately. And we'll follow what they're doing for a little bit. We'll wait
Right.
until it ends, and then when they start taking their money off, we'll probably be out before most of them even figure that out.
Right. So 2017 was a good time to buy it, and you should be out of it by now. Well, you bought in at $120, and you sold it at what?
Ball signal right here. So if you waited, if you didn't take this as a big warning sign,
Yeah.
what's the price up there? 200 at the top. So we're looking at 180. Let's just say 180.
Let's say 170 even. You got out there. 170. Okay. Bye.
Thank you. I will look for the next opportunity.
Yeah. So that's the idea is that, trying to figure it all out, that's been done. I don't know how many people build microwaves these days. That's the thing about new era versus old era. When you're in a new era, it's like, well, that guy did it. Well, I can do it too. It's like, you don't need to. You don't have to grow rubber trees and extract them and form them. And, oh, should I do steel belted? And, it's like, no, just buy the damn tire. And I'm not trying to sell anybody anything. I'm just saying, like, go ahead, but you're going to waste 10, 15 years figuring out what's already been figured out. It really is a choice. And I wish I had that choice years ago. I didn't. It was like, oh God, I got to build this. Yeah, it looks that way.
Yeah, well, I can tell you right now, I wouldn't be a trader without you, that's for sure. And I can tell you for sure that the percentage of our users would probably all say the same thing. We're probably in the 80 percentile, where people would be out there trying to figure it out like everyone else. Just, the worst part about it, this is the thing that really doesn't make sense to me, is that there are things out there that are available that require significant investment without proof. So if you're a trader, we've been talking about it the whole time, you should be seeking proof. That's something that you can actually seek, is proof. Yes. Data. What is the data? Show me what is real, what is not real. Once you have that, then you can start talking about different things. It's just crazy.
Yeah, and people are used to, and this is also in that old book, which I like old books and new books, because you get a frame of reference of, well, what has changed? What's improved? What's an old problem? Well, the old problem is the tipster. And they don't blame the tipster. They just go and take whatever the guy has well, I'll give it a go. It's not his fault if it doesn't work out. He's not an expert. Well, how is that any different than listening to, money network guys talking about, well, he used to be on Wall Street. Yeah, but that doesn't mean he's there for your best interest. He's there so he gets paid and he gets to be on TV and he gets the fame. That doesn't mean that he's actually doing the backroom work to figure out what is actually good for you. How do you know? So, let's go through some of his trades. Good, do that. Show me your book. Yeah. How have you done? And don't exclude anything. Give me all of your results.
I had this thought the other day when I was thinking about what it would take to build this, or for your opinion to be valid or worth something. And I was like, you'd have to be the guy who actually understands the math, number one. You'd have to be the guy who understands how trading and psychology works. You'd have to be, you'd have to have the guy who understood what to do with that information. And you'd have to be the guy who actually was able to do it. Turns out in real life scenario, there's only one person I know that is all that. And that's you.
Yeah, well, I understand. And I didn't want to do this. I really didn't. But it was one of those, I guess I have to. And that was where I started. And that was in 2003. And I had already looked. And, I've had a few people criticizing along the way saying, well, why don't you just use this tool? And so then I'd say, okay, great. I go look at their tool and I'm like, actually, I would save some of their emails and all their posts. And then say, well, you should go long on this thing. Like you should be buying that. So I kept that. And then sometime later they would have an email that says, well, actually, we said you should go short on that one. You should be selling it. And I'm like, I have that other email. You said turn left at Albuquerque. And if I would have turned left. And then there's all these other little nuances of things that are like, mediocre. I didn't expect to make a home run on this. I just wanted something that was reliable. That's all I wanted to do. Something that was the truth and was math-based, was not like, well, hunting for some guy's opinion, because you never know that, that your favorite advisor, Joe, he gets hit by a bus. Well, what do I do now? That's that business of, well, you're on UBI. Well, I don't want to be on UBI. Well, bring Joe back from the grave because he was a great advisor. You can't do that. Everything has to be, some system. Well, how is it a system when one of the pieces just disappears? Oh, well, that's a problem. So for us, we've got, adding more people to the staff. Well, now it's a system. It's reliable.
Has
It's not like,
resilience.
yeah. And the design all the way along was that I wasn't going to be the guy that looks after the front room. I like looking after the backside of the business and the math and making sure and this and that, but I'm not writing any more code on this. This is done. And I don't have to. It's like, it works. There's no point in carving out an extra couple percent for what? You know, that's somebody else will do that. And they're going to say, oh, well, AI does that. And it's like, yeah, good. Let's do benchmarks. Let's see how AI does versus this. I'd love to, because I already have done that. But the point is, well, what do you want to do? Well, sit in front of a screen all the time. That's not, well, when I was 2 years old, is that the thing I wanted to do? That was my passion in life. Well, when I was 5 and 10 and 20 is like, there's time sitting in front of a screen and doing stuff is fun and interesting, but there gets to be where's real life happening? If I'm not bent around trying to survival,
Yeah.
where's life?
Yeah.
And it's not about saving the world, because that's not my job. It's, it's a group effort that, people, I don't have to worry about that one. I'll do my part in my place, but I'm not, it's arrogant to believe I'm going to be, part of the community that rules the world. It's community. That's where it happens. Local community, help people, do what you want, where you are.
That's it. Do what you want where you are with what you have. Do what you can.
Yeah. Yeah.
Well, we've got an unbelievable breadth and depth of topics and details in this, so that's probably enough for today. Thank you very much, Alan. It's been a pleasure as always. Just listening to you talk about these ideas gets me all motivated and fired up for the future and possible trades and possible opportunities to come. So thank you very much for doing that, and I know that we all appreciate you.
Yeah, thank you, man. I appreciate it too. Yeah, I like working with quality people, and more good things are coming to this planet than bad things, and there really is a good future coming because of people like you that create community and support community. Because there's, you've known that all these people that are coming to you, it's like you would have never met them. They're finding you because they go, you have that, and they're awesome people. So thanks for looking after everything, sir.
Hey, this is it's my pleasure. It's definitely mine. All right, thank you very much, and we'll see y'all next time.